What if the reason most people struggle with money is not low income, bad choices, or bad timing, but the fact that they keep chasing the wrong assets? Many people work harder every year, yet financial freedom still feels distant. They save more, they learn more, they even invest, but something stays missing. The problem is not effort. The problem is focus. Most people only recognize wealth when it looks obvious. Cash, property, stocks. But real wealth is built through assets that work quietly in the background. Assets that do not trend. Assets that do not promise fast results. Assets that reward patience, not hype. In this video, you will learn the top 8 wealth-building assets most people ignore. These assets help you earn without burning out, grow without constant stress, and build freedom step by step. Some of them cost little. Some cost nothing. All of them compound over time. Let's start with the first one. 1. Sweat equity in a business. Many people wait for money before starting a business. That wait never ends. Sweat equity means building something with effort before capital shows up. Time, learning, and persistence replace money in the early stages. This is how many real businesses begin. Employees trade hours for income. Business builders trade effort today for income tomorrow. That difference matters. A business does not need to start big. It can begin as a service, a product, or a simple solution to a real problem. Over time, systems replace effort, and income becomes less tied to hours worked. People ignore sweat equity because it looks slow and uncomfortable, but it creates something powerful. Ownership. This asset builds long-term security and can support generations, not just monthly bills. 2. Business ownership over job dependence. A job feels safe because it looks predictable. A salary arrives on schedule. Tasks are clear. The path feels familiar. Ownership feels uncertain because outcomes are not guaranteed. That belief quietly traps many people for decades. When income comes only from employment, freedom stays limited. Your time sets the ceiling. Miss work and income stops. Lose a job and everything pauses. Ownership changes that equation. Even partial ownership creates leverage because income no longer depends entirely on hours worked. Business ownership does not always mean quitting a job overnight. It can start small, a side venture, a service business, a digital product, a share in a growing company. Each step introduces income that exists beyond your direct labor. That shift matters more than scale. This is how people move out of the employee side of the cash flow quadrant. Employees trade time for money. Owners build systems that keep working when they step away. Over time, systems replace effort. Income becomes more stable and more flexible. Ownership is often ignored because it feels risky, but relying on a single paycheck is also risky. One employer, one income stream, one point of failure. That risk feels normal only because it is common. Assets that generate income without daily involvement reduce long-term dependence on work. They create options. Options create control. Control creates freedom. Ownership is not about escaping work. It is about choosing where effort goes. When you own part of the outcome, effort compounds instead of resetting every month. 3. Real estate that pays you. Many people assume real estate is only for the wealthy. High prices and large down payments make it feel unreachable. That belief stops progress before learning even starts. In reality, real estate is one of the few assets ordinary people can understand, touch, and control with time and education. Rental property stands out because it produces cash flow. Rent arrives monthly. It does not depend on daily labor or constant decision-making. While markets rise and fall, a well-chosen property continues to generate income as long as people need places to live. Leverage plays a key role. Real estate allows you to control a large asset with relatively limited upfront capital. Over time, tenants help pay down the loan while the property itself may increase in value. This creates a powerful long-term wealth engine that works slowly but consistently. Real estate also brings tax advantages. Depreciation can reduce taxable income. Inflation often works in your favor, as rents rise while fixed loan payments stay the same. These benefits compound quietly without headlines or hype. Many ignore real estate because it looks complex. In practice, education, conservative numbers, and patience reduce that complexity. Cash-flowing property turns housing from a cost into income and transforms shelter into a wealth-building tool. 4. Paper assets held with discipline. Stocks, bonds, and funds are some of the most common assets people hear about, yet they are also the most misused. The problem is not the assets themselves. The problem is how people behave around them. Many investors treat paper assets like a game. They react to news, headlines, and short-term price moves. They buy when excitement feels high and sell when fear takes over. This emotional cycle slowly erodes returns. Paper assets reward a very different approach. They reward discipline. Regular contributions spread risk over time. Long-term holding allows compounding to work. Reinvested dividends and growth quietly accelerate results year after year. These assets give you ownership in real businesses. You benefit from innovation, productivity, and global growth without managing employees or operations yourself. That leverage of other people's effort is powerful. Many people ignore this asset class because it feels boring. There is no daily action, no thrill, no instant feedback. Yet boring is often what wins over decades. Time, not timing, unlocks the true power of paper assets. Consistency turns simplicity into wealth. 5. Commodities as protection. Most people think storing value means holding cash. That feels safe, but it carries a quiet risk. Cash depends on purchasing power staying stable. History shows that does not always happen. Inflation slowly erodes value. Even when balances look unchanged, commodities work differently. Assets like gold, silver, and oil hold intrinsic value. They are real, physical, and limited. They do not rely on government promises, central banks, or financial systems working perfectly. That is why they have been used as stores of value for centuries. Commodities often perform their role when other assets struggle. During inflation, currency weakness, or economic stress, they can help preserve buying power. Their purpose is not rapid growth. Their purpose is stability. Many investors ignore commodities because they feel dull. There is no compounding story or exciting narrative. But protection rarely feels exciting. It feels boring until it becomes necessary. Strong wealth is not built by growth alone. It is built by defense as well. Commodities act like insurance inside a portfolio. They help ensure that what you build is not quietly taken away over time. 6. Leveraging other people's money responsibly. Borrowing often gets a bad reputation, and for good reason. When used without discipline, debt creates stress and limits choices. But when used with care and structure, leverage becomes a powerful tool for building wealth. Responsible leverage means using other people's money to acquire assets that produce income. Real estate is the clearest example. A property can generate rent that helps cover loan payments, while the asset itself grows in value over time. This allows progress without waiting decades to save the full purchase price in cash. Many people ignore this approach because they confuse leverage with recklessness. The key difference is control and cash flow. Reckless debt drains income. Responsible leverage supports itself. When an asset pays for the debt it carries, risk drops. Cash flow provides breathing room. Time does the rest. Used correctly, leverage accelerates growth while discipline protects stability. 7. Financial education as an asset. Most people stop learning about money early in life. School ends and financial education ends with it. That gap quietly costs more than any bad investment. Understanding how assets work changes behavior. It reduces fear. It replaces guessing with structure. When you understand risk, leverage, and time, decisions become calmer and more intentional. You stop reacting and start planning. Financial education compounds, just like money. One concept improves many future choices. Learning about cash flow helps with business, real estate, and investing. Learning about risk helps across every asset class. This asset is ignored because it offers no instant reward. There is no statement balance or visible return. The payoff shows up later through fewer mistakes and better long-term results. Knowledge does not eliminate risk. It reduces unnecessary risk. It helps you avoid errors before they happen. Over time, financial education becomes one of the most valuable assets you own. 8. Mindset aligned with assets, not income. This final asset connects all the others. Without the right mindset, none of them work well for long. Most people focus on income, how much they earn, how often they get paid, how secure the paycheck feels. An asset-focused mindset shifts attention toward ownership. What produces cash flow? What grows without constant effort? What reduces reliance on a job over time? This change affects daily decisions. Spending becomes intentional. Saving gains purpose. Investments align with long-term control rather than short-term comfort. You stop asking how to earn more hours and start asking how to build lasting value. Many people ignore this asset because the mindset feels abstract. But mindset drives behavior. Behavior drives results. Long before money shows up, choices are already decided. When thinking aligns with assets instead of income, wealth becomes a process, not an accident. Let's bring this together. Sweat equity builds ownership. Ownership creates income. Real estate produces cash flow. Paper assets compound. Commodities protect. Leverage accelerates. Education guides. Mindset sustains it all. This is how people move from making a living to making a life. If this video helped you see wealth from a new angle, tap the like button. Share it with someone who is still trading time for money and needs a better path. Subscribe to the channel for clear, practical ideas on building real wealth step by step. Thanks for watching.